Good afternoon, everyone. Time to bring August the 28th to a close. One more trading day this month, and then we're into September, and it'll probably be the second week of September before we have a full market. In New York, the money center of the United States as far as managed money goes, those with kids vacation before Labor Day, those without kids vacation after Labor Day. So we'll have the full complement of players second week in September. And Europe comes back from vacation at the end of August, and it usually takes them a few days to get back into the swing of things. So probably have another week of light trading. Also, you know, the stock markets and equity markets are running on vapors according to the bears out there. The fundamentalists are scratching their heads, but the momentum players are, you know, still trading from the long side. So we started out today. We thought that 85, 87 would be a good buy zone. We still see the market with an up bias. Our premise is that the market will close over 2,000 come tomorrow afternoon. Why? It's a 3-day weekend, and they like to close the market up. We like this buy right down in here. Not the world's biggest trade, but you could have been long in the 89.50 area, and the market did trade up to 93.50. So that was a winning trade. We had a sell at 94 to 96. Just touched the area. You could have been short right here in the 92 area, and the market traded down to just below 90. So not a big winner, but a winner nonetheless. Right here, this is a reverse RTF. It retests the breakout. The breakout holds, and the market trades up this time to 94 plus for another small winner. As you can see, the trading has been very, very dull. Not a lot of volatility this week. Right up here off the 96 area, you finally get a beautiful retest failure. You can be short in the 96 area, and we're drifting lower in last trades at 94.50. So pretty slow trading when all is said and done, but a profitable day nonetheless. So what do we see for tomorrow in the E-mini? Idea this week is that 3-day wins usually bring positive closes. It's also the end of the month, and money managers don't like to see their compensation negatively impacted, so they don't have a lot of reason to be a seller tomorrow. So what I see tomorrow coming up will be a trading range with an up bias. Now, we have a lower high and a lower low. So what we can do on this is we can sell failure to take out today's day session high. So we can definitely get short in this area. And if we can't break this little area right here of support, which is basically 80 to 85, then we can get long and see if they do close the market over 2,000 into the Labor Day weekend. So trading range with a long-term up bias is the market we're still trading. Is this confirmed on the F2 screen? Now the F2 screen is the traditional profile. It's where exchange play a chart where you fine-tune your assessments and improve your execution, your trade levels. So we're definitely dealing with a P right here. We've got good buying beneath 85 for sure, and maybe below 88. So 85, 88 is pretty good support. We're at 95. The last rotate down stopped at 93. So the easiest trade to see is to sell failure to take out this 97, 2000 in the overnight session or Globex. And then the second trade would be to sell the 2002, 2005 area. On the buy side, this 93.95 for Globex. If the market were to close here at 95.50, so we have a low of 90.5, then a low of 92. So 92.94 will be buy one, and we'll make 87.89 for buy two. Going into tonight's market, based on the premise that we have a close close to 2,000 or more tomorrow. Let me get those copied down. Okay, tomorrow is settlement day for the note, and that usually brings a sideways or pause day. Look at guideline. They've bought all the 2, 5, and 7-year paper they want. The dealers are through manipulating the market, but their interest really is in evening out their positions and settling with all the parties involved. So we take, the two biggest segments of the market out, and we're usually left with exchange members. The market right here, and we rolled to December, so you can't read a lot into this into a lower high or a lower low. So what I see basis December is that we had ourselves a sideways market today. Basis September. So based on the idea that we have a pause market and we're at 26, we'll be trying to sell failure to take out 126 even, and we'll be trying to buy against the 126.20 area off of this chart. The roll does complicate things for us when we come to look at the charts. I look at the screen right here, and you can see that we've got a D pattern. And we have a seller, in the 30 area. So selling failure to take out 26.01 is the easiest trade to see. On the buy side, we got volume above time. We're at 22, so buying 23 to 19 is our buy zone, and we're going to assume a sideways market tomorrow. Now, we do have some news tomorrow. Personal income, not a market mover, 0.3. Personal spending, which is what they'll focus on, plus 0.1. They'd like to see that reversed. They like to see more personal spending. Core, which is the Fed's favorite inflation measure, 0.1. Chicago PMI higher than last, 54.8. Could be a little higher than last month, but Chicago PMI, and we'll adjust these in the morning. 54.8. And then Michigan sentiment at 80. So my guess is the market's focus will be the Chicago PMI, number 1, and Michigan sentiment, number 2, and that personal spending maybe will be in play. But this is the first piece of news up right here, and that's the first we'll get through. So trading range day, just going to work the edges. Sideways bias is the way that I see it. Okay, looking at the 30-year. Had a pretty good day. It's a P. Volume is well above time. The knob spread once again widened. It seems to be coming in overnight and widens during the day session where you can make 8/30 seconds, sometimes 12. That's been the play. Definitely a P with volume over time. So selling failure to take out 12 to 16 is the play. And on the buy side, I'm going to give it a little room. We'll be like we were, 29 to 01. And then 25 to 21 for buy 2. Looking at gold, again, with what's going on in Ukraine, it's really, really hard to say because you can't really trust the news article. The market has got a seller 95 to 1300, and we've had a pretty good buyer in the 75 to 80 area, but we're a long ways away from that. So we have a B. We might test support. So 88 to 90 is buy 1. It's very, very aggressive. If peace breaks out in the Ukraine, we do not want this trade. And then our 84, 86 will be buy 2. And on this, I'd sell failure to take out 95 to 97. And then 1300 plus or minus. Really going to be down to headlines out of the Ukraine. The story in Iraq, I mean, is mixed. ISIS never misses a chance to parade a bunch of people out and shoot them. Like I said in the last update, that right now the news is muddled, which way the United States is going to play it with Syria and Russia. One of the articles out, I believe, yesterday said that we definitely are going to go bomb ISIS, but we might bomb Syria too, and we will not cooperate with them. Now, if the objective is to get rid of ISIS, the enemy of my enemy is my friend. You might adopt a Middle Eastern approach to solve the problem and go after it that way. But it's so hard and it's so incoherent what comes out of our country. State Department and the administration on what they're going to do to whom and why. It's hard to guess how this will play out. I'm thinking Murphy's Law is in control, and Murphy will be ruling this deal. So in retrospect, we'll figure out a better way that it's a mess, and we're not adding clarity to it. Okay, we got a very low volume number here at 95, and we're at 94.58. So we're going to put up first sell 475 to 95. It's just resistance, and then, excuse me, that's 95.25. So we'll make sell 1 75 to 95 and sell 2 25 to 50. On the buy side, the last rotate stopped at 30.35, and then we have pretty good support down at 10, so we'll make 94, 94.25 buy 1. Peacetime articles, we didn't really shoot up for Russian convoys. Collins will take the market lower. Escalation in the fighting will take it higher. So we're down to headlines out of Ukraine and Iraq for playing this. So you know the news, you got the trade, and it's unfortunate to be put in that situation, but that's what it is. That's the way it is. So that is reality. If the news when London opens up isn't bad because daylight is hitting the Ukraine and the Middle East and it starts to sell, it's a good sell. I just don't like the idea of going home short the day session in gold and crude for obvious reasons. Some part of Europe, German study for discrete defenses said war with Russia is on the table. Don't discount it. NATO said Russia has definitely been proven to have invaded the Ukraine. So, like I said, the news is mixed. What's Europe going to do about it? There was a story out that from Germany, which is the wealthiest country in Europe and the EU, that only 8 of their frontline fighters were serviceable, and the rest of them were not because of a lack of money to buy spare parts. Not comforting news. So definitely dealing with a B. It's definitely a long-term sell. Question is where. So we're at 86, so we'll make 95.05 sell 1. And then we'll go back to our 15 to 25 for sell 2. On the buy side, 60 to 70 worked out okay. And then 40 to 50 for buy 2. So that's it for the 28th. We'll see you bright and early in the morning. We'll get after it again. Had a pretty good day today with low volatility and low volumes, and we'll see if my scenario for the E-mini closing over 2,000 tomorrow comes